Welcome everybody to the Premium Pirates YouTube channel. It's time for us to do an updated live trading video on the options wheel strategy. If you're just learning this strategy, you can follow our channel. We're going to have a ton of great videos to help you get started and really get up to speed quickly. Some of the things we are going to discuss in this video might be a little advanced if you're just learning the strategy, but still super helpful. It's going to show you how to use the tools, how to tie everything together, how to manage your campaigns, and just do everything you need to know to run the options wheel strategy effectively. As always, we're going to be using the tools on premiumpirates.com. So if you want to try that out, go over to that website and sign up for a 14-day free trial. Let's go ahead and dive into the market. I haven't actually tried to do this side-by-side video capture before, but it's going to be pretty helpful so I don't have to do so much jumping back and forth between windows. We can kind of compare everything that we're looking at in real time. So it's Friday afternoon. The market, we're not too far from close at this point. So I just want to take a look at first, the open positions that I have, the open campaigns that I'm running. So whenever you have a call, it's a short call, I've sold the call option, and you're seeing that you're in the positive. That's not necessarily what you want. This is somewhat backwards in the sense that I would really like to have these shares called away. I have 200 shares of Snapchat right here, and I'm down about 6.77%, which means that this option, this contract expires today, and since it's lost 98% of its value since I sold it, odds are it's going to expire, meaning worthless, which is not necessarily a bad thing. I would love to get the shares called away, but campaigns tend to go on for a while. If you look at this current campaign that I'm running right now, you can see, my net premium has been increasing. My average risk is kind of, we're at the peak right now, but, my cost basis is $11. If you include all the premium captured, my adjusted cost basis all the way down to $9.77. I'm not going to close this right now because it would cost me $1 per contract to close. I'm just going to let it expire worthless. And then on Monday, I will sell some more calls on that. Same with MGM. This is going to expire worthless. I'm, just down 1% on that. So this is pretty close to break even. I'll sell another call. It should be pretty valuable on Monday. This Intel, same thing, going to expire worthless. And then this Pinterest contract here, this is about, where I said that the plus and the minus, the percentage return is sort of backward. So on this put contract, this is about to expire and it's lost, 99% of its value since I've sold it. It's essentially going to expire worthless, and I'm not going to be assigned these shares. Again, I'm not going to close it because it's not going to assign me anything. The current price of this of Pinterest is at $39. I'm not going to get assigned a cash secured put of $30 here in the next hour or so. So I'm going to let that one expire worthless. Normally, I like to close, and one of the things that we advocate for is closing your positions when you get to 80% of your return. It looks again like, so these are the only ones that closed today. They're all going to expire worthless. When market opens on Monday, I'm going to have 3 new call contracts to sell. I did notice in the middle of the night last night that my broker here, Robinhood, they alerted me that I had been assigned on a put contract I had open for Walgreens. And anytime that I reach a 15% loss, I just consider that an inflection point. Is it time to move on from this? Is it, do I want to maybe open another cash secured put to lower my cost basis? I haven't even had a chance yet to sell a covered call for this yet. But it's currently trading at, where did it go? $10, and my average cost is 12. Okay, so what's the fair value for Morningstar on this right now? I mean, the analysts still have the fair value updated, 8 days ago at $20. So I'm probably going to be willing to consider maybe opening another cash secured put to lower my cost basis, as long as the percentage of my portfolio I have invested in this one position or tied up in this one campaign never exceeds like 15%. We try to deploy in 5%. Your initial position should be no more than 5% of your portfolio value. And maybe after that, maybe go to 10%. After that, go to max 15%. You never want to go more than that. And even though I was assigned on this put, you can see that I actually have another put open at 1050 at a much lower strike that doesn't expire until 2 weeks from now. So since that's still 2 weeks away, let's go ahead and sell a cash secured put on this position at, my average cost is $12. So we're going to look at selling a call, and $2 premium's probably not worth it. $3 is still pretty weak. $5. I'm going to go ahead, since I have another put that expires on the 21st, I'm going to go ahead and sell a call that expires the same day as 2B. Because if for whatever reason I do end up getting assigned another cash secured put, which seems very, very possible, it will lower my average cost, and I can actually sell a call lower at that point. Hopefully that makes sense as I'm saying it. Essentially, I won't have to look at $12 strike price. I can, maybe get down to $11.50 or $11 and get this campaign closed sooner. All right. So $3, not very impressive, but the campaign, it goes on. You can see here is what the life of the campaign looks like so far. And it will have, when I update my wheel strategy tracker, it will have that extra $3 premium in there as well. Okay. Now going back into that position. All right. So I've got anything else that's open that gets to about 98%, or I'm sorry, 80%, I like to go ahead and try to close. So this gold $15 put, I mean, it's time to move on from this guy. I mean, the bid ask spread is 6 cents, but my average credit on this was 32. I can probably split the difference here and go ahead and buy back this cash secured put. Buy to close, submit. See if that gets filled in the next few minutes here. All right. And anybody else that got to 80%? Nope, nobody else is up to 80% yet. So pretty boring day in terms of being able to close out open campaigns. All right, but you see I do have a little bit of buying power left here. So let's go ahead and dive into the option scanner. Maybe see about opening a new campaign or extending an existing campaign. So head over to the option scanner. I'm not going to put anything in the expirations yet because it will automatically exclude today when we look at this. But as always, I limit to my popular wheel watch list. The watch list combined with the wheel strategy screener on Premium Power, it's incredibly powerful. And I want stocks trading at a discount to fair value. I personally, I use the Morningstar fair value. So I'm going to do 1-star rating. The deeper the discount between what the stock is trading at and the fair value, the higher your star rating will be, but I'm going to go minimum 1 star and above. I'm not looking at anything for annualized return right now. And normally you've seen videos in the past year, I kind of go down to 2% return, but I've been doing 3% lately. I've just had some other things going on. I've been pretty busy. And so my frequency of trading has been a little bit lower. So, I just want to get, more juice out of each of the trades that I do make. Okay. Hit scan and tons of results. If you haven't used the option scanner in a little bit, we actually added some really nice features here where you can sort by different columns here. This is super powerful. And so what do we have here? All right, so I looked at the delta of 0.3 is my max. If you're not familiar with delta and how it works, it's a whole other conversation. But essentially it's saying that there's a 70% chance that this options contract expires worthless, which is good because I'm on the short side of the contract. I want it to expire worthless if possible. I don't have any filters on for earnings right now. And this one here, this Moderna, this returns 3.7. I can hold it through the earnings date, right? So the expiration here is February 21st. The earnings date is next Friday. Somewhat risky, but the discount to fair value is 5 stars. Okay. The IV percentile is a little bit high. IV percentile means that 83% of the days over the last calendar year, the IV of this instrument was lower than it is right now. Again, like that 70% discount to fair value is just super juicy. I know I don't have any action on Moderna right now, so I'm willing to take this position just because I know I don't have a lot open in this sector, right? And I know that I don't have a lot open that I'm holding through earnings either on the cash secured put side. So just trade Moderna options, sell a put for 21st, 30-50 strike way down here. I mean, it's trading way. All right. So look here, it says the premium is $1.14, which means every options contract is 100 shares. So the actual premium you'll get $114, but you have to secure the cash of $3,050, right? You just move the decimal over a couple places. Um, and the premium here in the scanner shows 114, but the same position here in Robinhood is showing 111, and I'll show you why. That's just due to a bid-ask spread. Okay, so the bid is 111, which it shows me here. The ask is 115. This is for saying that the 3.7% return, 159% annualized return, which if I get that every week, that'd be a good year, right? So it just went to 112. The bid at that there this has a lot of volatility going right now. If you look at you can watch on my screen, the ask is kind of jumping all over the place. But I just want that 114. It's 114. Let's see if we get filled at that. Okay, so I'm selling a cash secured put, 30.50. I'm going to put I'm going to meet kind of in the middle at 114. Let's fire this off into the market, see if we get filled. Filled immediately. All right. So I know that the first covered call that I sold was, just shy of $3. Premium wasn't very impressive, but here we are just a few minutes later, and I just did, $113, $114 in premium. Pretty impressive, really, when you do this consistently over a period of time. Now we're gonna have to watch this one, see what it does. Obviously, we don't want to get too far underwater, but this is like 5% of my portfolio value that I put my max strike at $35. This one came in at $30.50, obviously. So it gives me room. I got wiggle room to go down, to lower my cost basis if I need to, if for whatever reason this one goes against me. Still haven't been filled in this gold position yet. Market closes soon. So we're just going to leave that one. I might look at that again on Monday. And that is a brief session of live trading, but they're not all that in depth. If you're trading the options wheel strategy, something you're probably gonna have to look at relatively often. That's why I said I'm looking at return of 3% right now. I just haven't had as much time to dedicate to it, so I really want to get a really nice return on the time that I'm able to spend on it. Just really make it worth my while. I'll do another one next week. We'll talk about how these positions ended up, what's going on with these campaigns. I'll go ahead and update my wheel strategy tracker, and we'll look at what's going on with gold, what's going on with this Walgreens position that I'm in, and we'll keep track of this Moderna campaign that I just opened. Until next time, definitely head over to Premium Pirates, sign up for a 14-day free trial, follow our YouTube channel. There's a lot of good videos on there that are going to help you get started. We're trying to update that a little bit more consistently so that you can have good training on there. You can really learn how to make this strategy work for yourself in the way that we do it, and to make income off of your investment portfolio. So until next time, get out there, keep plundering those premiums. Thanks so much for watching.